Symposium for the 10th of April 2020. Today we are going to have a look at some analysis. We'll do a top-down analysis on a couple of pairs. But before we do anything, I just want to show you the coming update for the currency strength histogram. It's a real remarkable tool, and I think it's something that you'll all really enjoy. Okay, so this is the software here essentially, and you'll notice here that the interface has changed a little bit since we saw it last. There's a new section here called mean, and this contains a bunch of information, new settings, and I'll document these in how-to tutorials in the future when the software is ready. And also notice here that in the scanner the trigger value has been removed, because now we're looking at this information instead to identify triggers. Okay, so what we can see here now is that we have a few new lines. Before I go into too much detail, I just want to talk a little bit about the software as a whole. In order to combine the histogram functionality, the index functionality, and the mean functionality, I had to rewrite the majority of the software. And so I did put in some long days and managed to get this done pretty quickly. And so now I'm just doing a lot of testing to make sure that everything is looking the way it should be. But we should also experience some performance enhancements, because you can see here that it's going a lot quicker now than it normally would. And this is because I'm working with the buffers in completely different ways than I was previously. And so a buffer is, if you look at this piece of software here, on this indicator window we have 1, 2, 3, 4, 5. We have 6, 7 buffers. Okay, this is a buffer, and the buffer is simply an array of values that we have in this window here. So this contains a series of values that are the same, and then we have a buffer that contains the histogram values, and then we have a buffer for the American dollar, for the British pound. We have a buffer for the mean, and also we have a buffer for this buy trigger just down here. Okay, and so now I'm working with the buffers in a very different way. It's much more efficient than it was previously, and so you'll notice that the performance of the histogram is much better than the previous versions. And so I encourage you to update when the software is available. But what it's doing now is it's using the histogram as input. So first of all, I have to do a lot of calculations to calculate the index for the American dollar, for the British pound, and for all of the currencies. As a matter of fact, you can see here that we have all of these currencies. So we have the Australian dollar, British pound, New Zealand dollar, we have the Singapore dollar, which is the yellow one, Canadian dollar, which is a magenta, Japanese yen, which is purple, American dollar is green, Swiss franc is lime green, and the euro is blue. And so I have to calculate an index for all of these, and then I have to perform some calculations in order to extract the histogram, which you can see here, which is essentially simplified. It's the difference between the base currency and the cross currency. And then I'm just getting started with respect to this information here, this new indicator here. Okay, so I use the histogram data as input to the algorithm that then calculates the mean and the sell and the buy zone just up here, or the buy side. And it's pretty remarkable. And so the whole general concept would be that if the mean is below the zero line, and the zero line is the white line here that the histogram rotates on, if it's below that, then you want to be selling, and if it's above that, like it probably is on this one here, well, then you want to be buying. Okay, so it's very accurate, and it's very objective. You have a simple glance at the yellow line, and you see where it is. Where is it? Is it below the zero line? Well, then you know you should be selling. And I know this has been a big question in a lot of people's minds, is should we be buying or should we be selling? And so this just helps remove the subjectivity, and it helps simplify that for us. And it's based on some very profound information. So this isn't just a random line that's being put there. There is a significant probability that if this is below the zero line, that this is going to move lower from here. Okay, and so it's a very interesting tool. But this is currently in the works, and it should be available very shortly. If we have a look at the new settings and how we use it, I shan't go into too much detail. I just want to illustrate the scanner here. So if we just enable the scanner and we say we want the modifier to be 1.5 because there's nothing in 2.0 at the moment because I just tested. So if we just enable that, so now it's crunching all of these symbols here, everything in your market watch window that contains any of the 9 currencies that we discussed just a second ago, and it's telling us that the British pound is ripe for selling, the Australian dollar Kiwi is ripe for buying, and the Australian dollar Canadian dollar is also ripe. The other way around. The pound Aussie is ripe for buying, and the Aussie Kiwi and the Aussie CAD are ripe for selling. So if we have a look at, first of all, the pound, let me reset this so we don't get the alarm once more. So if we have a look at the pound Aussie dollar, where are you? Here we are. So this should be approaching an area that could be potentially attractive to buy, and you can see that pretty nicely here. How we have the histogram; it's getting close to this green line, so that's telling us that okay, this is reaching some pretty extreme levels, and so we could start to look to accumulate long orders eventually. Okay, so now this is kind of on the alert list, so we want to pay attention to the pound Australian dollar, and notice that we have this nice area of demand just here. Okay, the beginning of the buy zone for this is just here, and we have this nice area of demand just below, and so we have this information here that is telling us that we want to be buying. We have the supply and demand software that's telling us that we have demand just here. We have the orange line that is telling us that there's a likelihood, it's probable that this pair is going to continue to move higher. Okay, so it's a lot of it's a kind of a convergence of a lot of very profound factors, a lot of data that is telling us that it could be interesting to begin to buy this at some stage. Okay, and we look at the technical supply and demand, support and resistance, or whatever else it is that you like to use to enable us to make this decisive commitment to either buy or to sell. In this case, buy. Okay, let's have a look at the Aussie dollar Kiwi, which we have just here. Let's drag this on. So we should be looking to sell this at some stage. Okay, and you can see here 235. Let's see what the histogram got to. 2-3. Yeah, it's getting close there. So we're getting now. It's reaching pretty high levels, and so it's saying we're getting close to an area that might be an attractive area to begin to sell the Australian dollar, New Zealand dollar. And if you look here, we're actually right now we're at kind of the beginning of a sell zone. It's not a real pretty area, but we are getting close. On the daily chart, it's a little bit clearer. We have this candle that kind of closed below this accumulation, and so we could go something like that. So maybe around here we have something that might be interesting for us to begin to sell at, and this is the 1.0495. And if we have a look on the 4-hour chart again, you can see that this is where it's roughly located. Okay, so we have the orange line, the yellow line, which is below. It's below the zero line. We're approaching an area where we can expect price to experience a slight bit of exhaustion and return to the mean. And we have an area of daily supply just up here, not a pretty one, but an area, a price sensitive area we can call it. And here on the 4-hour chart, you can see that we do indeed have a 4-hour area of supply, and the beginning of the sell zone is the high of this candle here. So this is a nested area inside this daily area, and so we could look to entertain a sell trade at maybe this area here. So this is at the 105.18. Okay, so there's another example. So let's have a look at this final example, the Australian dollar Canadian dollar. So this is high, so we can expect that maybe this will begin to move lower. And yeah, and this one was entered by the algorithmic trader that I used to test the histogram, and this was opened automatically just at this level here. And so if we have a look at that, at the time, I mean, price had this is interesting because price poked into the to the red line, so the sell zone. It got into the trade, and now notice that the histogram is beginning to move away. Now there's a gap between the histogram and the red line, so that's telling us that we actually have the strength of the Australian dollar is weakening slightly in relation to the Canadian dollar, okay, because now we're not moving through this line, now we're actually moving away from it. And also notice that we have the yellow line here, which is below the zero line, which is telling us that there is a probabilistic likelihood that we are going to continue lower. And note here that we do have this area, these areas of 4-hour supply just here. And so we can expect maybe price will maybe move up into this area here, find some resistance, maybe engage in some limits to sell, and then begin to move lower from here. And if we actually have a look on a 1-hour chart, there is actually a pretty nice 1-hour area that I saw earlier, and you can see it just here. How we kind of price moved sideways. We had something in here, price bounced at it, we came down, we sat on the area, we distributed, and then we cut through. And so the algo trader, or the histogram, was able to find this area for us. And it's pretty remarkable how these levels line up. So you have an area of supply, an area of demand, and when the histogram is telling us to buy and sell, this is very often happening at an area of supply and demand, which I find remarkable. And it just goes to prove that combining supply and demand is a pretty delicious combination. And if we have a look at another trade, this is an interesting one here. This is one that was entered manually. So this area here, we had this 4-hour area just here. Okay, price tested that, and I entered at the high of this candle here. And notice, price didn't get close to this area here, and so to the sell zone. Okay, the currency strength, the sell zone, and so this is maybe a little bit too early. And sure enough, price moved up, and now it's kind of challenging. It was moving a little bit closer to this stop, and it's, who knows what will happen. Maybe it'll stop the position out, maybe it will manage to turn around and move lower from now. But it's very interesting to see how these work. And again, this is lined up nicely with this. Okay, so we have the yellow line that is below the zero line telling us that we have a likelihood of this pair continuing to move lower. And so these just kind of overlap nicely. But it's just very beautiful and very interesting to see that these levels just line up pretty nicely at supply and demand. Okay, and the computer is calculating this stuff more accurate than my eyes were at the time I decided to take this short. Okay, so pretty interesting stuff, and this should be available before too long, and so I encourage you to use it once it becomes available. Good. So let's have a look at another situation. Let's have a look at good old supply and demand. And for those of you who don't have the Pipnotic software, let's just have a look at analyzing a price chart. So if we enable the default, good, we've got the default on. Now notice here that price on the S&P is wriggling higher. Okay, so we spoke about this area here, just here, because this was a candle that kind of left this area here, and price came up pretty close to it, just below, and then it moved away. See, we came down here, this kind of poked up into this area, there's probably micro supply up here, moved away, and then we formed this area of demand. And this is demand because on a small time frame it's probably clearer. You can see that, actually we've got to mark this off on the daily chart. Okay, so we go like that, then we go to the 4-hour chart. You can see that price was able to move above here. So when I say here, we had this here. Okay, price left, moved below these lows, price tested this area, we retreated, we did it again, we retreated, price rallied, rallied, and this area of demand was responsible for price trading above this area of supply, but it didn't hold. So price came down, we poked into this one here, this one's responsible for moving this, and then we started to move higher. Okay, so very, very interesting. And it looks complicated perhaps, but it's really not complicated. And really, I mean, essentially, you are looking for areas where price has historically moved away. Okay, so if we have a look at this one here, we can see that we have this one here. Okay, so price went up, we had a bounce at this area, a bounce here. Okay, so price went down, we went up, so we left this area, we came down, we reacted to this child, we came down, we tore through this area here, and then price came up to this area here, so kind of support becomes resistance, and then we left. So that's telling us that we have an interest to trade at this area here. This is an attractive price at the 2886.20 area, but if we go on the smaller time frame, we can probably find a more interesting area, a little bit clearer, that may be even more attractive. And you can see here that price came up one time, we came up two times, a little bit deeper, and this is where we found, rather, we were able to advertise these prices that were high enough, just above these highs, to encourage this. But notice here that we actually have this just above. Okay, this here, and this is interesting because we had this here, and again, this is a price sensitive level because price reacted at it. Then this one, price sat on it for a while, then we managed to cut through it, and price has not been back there since. So the area that could be interesting to begin to sell is this one here. Alternatively, we have this one up here. This is one where price formed this area, this low here, which lines up nicely with this one. We went down, the slingshot was pulled back, and then we cut away. Okay, and this actually gapped down from this area here. So I think that we're probably going to begin to onboard some short positions from around this area here. Okay, so we have that just here. So I think once we get up to this area here, the 29.19, then I think that we'll begin attracting some people to begin to sell. And it's pretty clear here on the 4-hour chart. If we just mark that off, we have our two distribution candles here. Just mark them off like this. That's what we have. And prior to that, we had this one here. Okay, just here. Tested. Price went down here. We distributed, and then boom, we cut down. Slingshot was pulled back, and then boom. So we're getting close to that area. We're getting very close to that area indeed. So the beginning of the sell zone is here. Support becomes resistance. So we're returning to that area of resistance. And lucky for us, we have an area of supply that's lined up just above that. Okay, so this could be an attractive place to re-enter this short, this move lower here. Good. So let's have a look. Actually, I'm going to leave that on there like that. And I'm just going to put something else on. Let's try this here. Let's see what's going on here. So here we have the American dollar, Swiss franc. This is a weekly chart. We are trading between a couple of ranges. We have this area here that is being tested, and we have this. We have these highs up here. We have this here, which has been tested quite a lot. Okay, this looks similar to a distribution candle, and this one closed below it, so I just kind of put the box on around there, around the highs of the candle that pulled back and then departed. So around from here, you can see that. I hope that's clear to here. Boom, like that. That's what we have there. So now we're trading between these two. Okay, this is monthly supply and demand. This is pretty significant stuff. So we go to the weekly chart and see what's going on. We just reacted at this. Okay, we moved down, down, up, down, up, down. So we have lower lows and lower highs, and now we managed to move above this high here as a result of dipping into this monthly demand. Okay, so we got into the smaller time frame and see what's going on. Well, you can see that we had, I mean, when price does this, when price moves down really quickly into demand, this is a really nice place to begin to buy, because when you have price that's trades so inefficiency, it leaves very nice liquidity voids in the wake, yes, in the move that moves down like this. And typically, if price comes down that quickly, like that, price comes down to an area, it'll typically retreat similar to the way it came down like this. So it'll normally come down quickly and it'll normally leave very quickly as well. And so normally you can spot these. So when you have strong price movements moving down into demand, in this case demand, don't be afraid to buy at this area here, because it's a very high likelihood that price will move back into the area. We'll find somewhere advertising low prices, we'll begin to onboard some buyers, and then price will disappear as quickly as it came in. And this is what you'll see at quality demand. If you notice here as well, supply and demand. So we had this area here, price came down to it, so we'll just mark off the whole area like that. Tested. Okay, so each time price comes, first of all, our buy zone is here, because this is the deepest the slingshot came to. Then it went down to here, so we move it lower. Okay, so this is the most expensive price, and then price came to that level a little bit deeper. And what does that remind us? Well, we have our plate. I'll move the plate, I'll put the plate here. We have our plate just here. Then that plate, we have our pancakes. So we have pancake here, pancake here. We have many more like so, just using big pancakes. And each time price comes down, pokes into the plate of pancakes, well, that pancake disappears, so that one's gone. And when I say pancake, I mean a pool of liquidity. Okay, so available liquidity for sale. Okay, and then price comes down, now it's gone. Now that price is no longer available. Now price will have to go cheaper in order to attract new buyers. And so price went down to this one here, so that one's gone. And it actually went down to this one here. You can see it went down, so that one's gone. And so for the fresh liquidity, price is going to have to go at least as low as this push here. Okay, which it did, and it went just to this area here, and now it went back up again. And so each time price comes down, the pancakes disappear, liquidity dries up, and then before you know it, you have no liquidity, and then price will start to entertain the notion of moving below, moving lower and lower and lower to find new areas at which to trade. Good. So now price is here, we went up, now we're moving down again. What's going to happen? Well, we don't know. We have no idea. What we can do, we can look at currency strength. And if we want to do that quickly, let's do that very quickly. Let's go here. Let's go to the American dollar, Swiss franc. Let's go to the big time frames. You notice the price has already been down here. Price got pretty close. If we change this modifier, I think with prime. Let's see if we get close to this. Yeah, look at that. I mean, price came down, it poked right into that at the 1.618. It poked right into that and it left. See, so this is telling us again that we have a keen interest on buying at this area here. If the histogram was high, it was like in a high level, just here, I would be nervous about buying because it was bought. I mean, we have a lot of demand for the American dollar, Swiss franc. Okay, as you can see here, and so this changed. I mean, this is all about cycles. Okay, essentially, it's all about cycles. So if you look at a currency pair like that, you have your zero line like so, and then you have. See, there's a fancy tool. No, we'll just use a handwriting tool. You have periods of strength and weakness, and strength and weakness, and so you want to time this correctly. Okay, so if the histogram had done this, it went up and down and then up, and it was up here when it was approaching this here, well, then I wouldn't have bought. Why? Because we were here in anticipation that we're going to continue moving low or potentially move low. Nothing's certain. Okay, then I would expect price to do this, and of course I'd expect price to do this and keep moving lower. Okay, so you want to line these things up, which you can do by using a combination of currency strength and supply and demand. So buying at demand, where we have the end of a bearish cycle, and selling at supply where we have the end of a bullish cycle. And this stuff you can see when you use tools like currency strength histograms. Okay, and I think this is a very powerful concept, and I encourage you to embrace it. Okay, so that's what we have there. That price is moving higher. So now what's going to happen? Well, we don't know. We can expect, because we have left here, because we've left here, I'm just going to, like this, we can expect, I'm thinking we're probably going to do something like this and go up and then come down, because we are down here. We are at the end of a bearish cycle. So if we measure from here to here, kind of an average, I mean, this is kind of roughly where we can expect price to be in the future. And here we have the same thing down here. We would express it, I mean, it goes all the way back here. We can expect price to kind of come back and then move back up again. So I'm expecting that this, the American dollar Swiss franc, is going to continue to wriggle higher after some retracements lower, which is essentially an advertisement of cheap, attractive prices. Okay, let's have a look at something else. And again, here notice that if we consider these cycles just for a second, we have lows. Oh, that was a little bit too high. We have something, so I'm trying to line it up here. Okay, so we have here, so we have this area just here. We have the other one just here. And so now, I mean, we've been down here, which lined up nicely with this. This is the end of a bear cycle, and so now we can expect things to move around, at least for a little while. We don't know if it's going to kind of go up here, or we're going to kind of move around, go a little bit higher, and then continue lower. But according to the histogram, and we can see that we have reached the end of a cycle. Okay, price had a bounce. Now we're moving up. Okay, so we entered the beginning of a bull cycle, like a daily bull cycle, and so we can expect price to move higher for a little while at least. And so we want to be buying at demand. And we had a lovely area of demand just here, which was tested. The software put this on the chart. 1, 2, 3. When this candle closed, so this long green candle I had, when this candle closed, this rectangle was put on the chart. Price came down to it, we poked into it, and we retreated. Where do we go? Well, we went to opposing side of the market where we had supply just here. Okay, and this was on our chart days before price got there. Okay, so that's pretty cool stuff. Let's have a look at the American dollar, Canadian dollar. Let's have a look at the big time frames. What's going on? Well, we have our cycle, don't we? We have our cycles where we have price is moving down, and it's moving up, and then where's it going to go? Well, we don't know, but we can have the same thing here. Price is moving down, we're moving up, getting pretty close to this, aren't we? We're getting very close. And so what can we expect? Can expect price to go down. Okay, is this going to happen? I don't know. I don't know if this is going to happen, because there's a lot of turmoil in the oil industry, no pun intended, that is kind of affecting that is very much affecting the Canadian dollar. When situations like this happen, well, then you can expect liquidity to be drawn out of the market as people become a little bit cautious of the current environment, and this can cause price to move up quickly, very quickly, and it can also cause price to move down very quickly. So you have to be quite careful in a situation like that. Okay, but it doesn't mean that we can't focus on this. We have to focus on this, but at the same time, you just have to be a little bit careful. In a situation like that, you want your stops to be a little bit wider than normal. So instead of having tight stops, then you have more aggressive stops, or rather more conservative stops further away from price, and just allow price to kind of move, because price is going to be seeking liquidity. And for sellers, price is going to be moving higher. It's going to be moving very much higher in order to find these sellers. Yeah. Despite this fact, the price of the American dollar, Canadian dollar, came to our supply area to the pip. Once here and another time here to the pip. So this is just returning to this area here. Okay. When? Well, it got here at the end of a bull cycle. Now, isn't that fascinating? Good. Okay, it's 30 minutes, so I'm going to finish up now, but if you have any questions, please add them to the video below or post them in the Discord channel. And yeah, and if you want to see more videos like this, or you want to get updates next time I do another video, please subscribe to the channel, and maybe hit the notification button, and you'll be sure to get updates when they are available. And have a great weekend. Be safe. Take care of yourselves and your families. Thanks for watching.